Half an hour away from the opens in Hong Kong, Shenzhen, and Shanghai. You're watching the China Show. I'm Yvonne with David Ingles.
Good Monday morning. Let's get to it, shall we? Our top stories today. Stocks across the region edging higher as investors look ahead to key central bank decisions and this week's gathering of policymakers at Jackson Hole. Now, Kamala Harris kicks off a battleground state bus tour on the way to the Democratic convention, while Donald Trump plans a blitz of rallies in a border visit. And as the election campaign heats up, we take a deep dive into the state of U.S.-China relations and where it's headed under a new administration.
A quick look at the action here right now, and yeah, we're seeing a bit of caution in these markets, of course, ahead of the key Powell speech at Jackson Hole. Is he going to guide towards some 25 basis point cut for the Fed or remain tight-lipped on the timing? That certainly is in the minds of many traders here this morning. And the debate really has shifted from will they or won't they to how big are these cuts going to be? Is it going to be 25 or 50? Needless to say, though, stocks are actually pretty much trading sideways here this morning. You take a look at how Taiwan just opening up. It's pretty flat right now. But keep in mind, when you take a look at the NASDAQ 100, the Nikkei, the Kospi have basically all erased the losses from that August 5th turmoil here. Stocks also had one of the best weeks of the year. So certainly equities are still seeing a bit of refresh optimism here right now. The Bloomberg Dollar Index also nearing that 5-month low. That should bode well for equities here today, but not quite today. Dollar yen, though, we're still trading at 147 levels. We're still seeing that weakness there continue for the Japanese currency. Of course, Ueda speaking on Friday is going to be quite interesting as well. We're watching Brent market seems to have stabilized a bit. Right now, we're still below that $80 mark when it comes to Brent crude, but iron ore continues to tumble, of course, on that China story. A little bit of recovery here today, but we're still talking about $93 out in Singapore. We're seeing some upside, about 2% right now. Last week was all about the tech earnings when we had Alibaba, JD, Tencent. Certainly, JD helped spur a little bit more positivity towards the tech sector, but then again, you're starting to see that weakness in the consumer sector really weigh on some of those stocks, though. But there was enough for some dip buying, at least in the U.S. session on Friday. Golden Dragon did this, and then this is the approach to the open here right now. So we talked about the CSI 300 snapped out of that 3-week skid, I should say. Hang Seng was up for 2 straight weeks as well. So we're pretty much flat for futures here this morning. 218 for your Chinese 10-year yield. You gotta wonder, Dave, are we back to comfortable levels for the PBOC after the extreme measures they've done to stop this bond rally from going? 715 for the currency as well.
Yeah, well, we are until we aren't, right?
Yes.
And, of course, I think we have loan prime rates this week coming off the MLF, of course, last week as far as some of the China data goes. And, the rally that Yvonne was just talking about here in Hong Kong, we have to be more specific on where we are seeing some of the upward price action. So I think one other indicator that risk is starting to really come back here in Hong Kong, at least, is the Hang Seng Vol Index, Hang Seng China Vol Index as well here. We're nearing 2.5-year lows in that. The VIX, of course, on Friday following the rally also fell back to, I guess, encouraging levels. Now, as far as changes to the index, so the quarterly review on Friday, no change to the HSI. We did get some changes, though, on Hang Seng China Index. We were looking at 2 specific stocks today. JNT Global Express and New Oriental added to the HSCI in favor of SenseTime and JD Logistics, which were taken out of the index effective, of course, September 9. Watch for reaction there. We talked about gold, spot gold record high on Friday. This losing streak we're seeing in convertible bonds underneath the hoods, I think we're down about 6 or 7 straight days going back to August 8th, which is the longest, by the way, since January. We have a price gauge which tracks that. And also, of course, the pressure we're still seeing across the metals space, like iron ore. And, of course, a big talking point in last week on the back of weak macro out of China is where you are in this overcapacity in steel, and rebar futures is a good example, too, of that. Right, so lots to watch out for as far as China today. This week, all roads lead to Jackson Hole. To Yvonne's point, how big will they cut, and not so much will they or won't they. Friday, of course, also the BOJ, and, of course, throughout the week is the DNC over in Chicago. So, yeah, everything from politics to markets and everything in between.
Yeah, let's bring in our executive editor for Asian markets, Paul Dobson, joining us out of Singapore here this morning to kick off the week. Paul, there's a lot of event risks, obviously, we were just highlighting there. What do you think is priced in, and what are the risks, really?
Yeah, good morning, Yvonne. Wouldn't it be typical that the biggest news of the week happens after we've all gone to bed on a Friday? But lots to look forward to all the same, and people are really going to be getting ready for Jackson Hole all the way through this week as well. I think what the market is expecting right now is for the Fed to indicate, or for Powell to indicate, the cuts could start as soon as September. What people will be paying attention to is whether he sort of stresses a gradual pace of declines from here, any sort of language or nuance around there. Now, typically, he's quite tight-lipped on that kind of thing, so he might try not to give too much away. But I think that, the least that we can conclude is that he will give quite a strong signal that the cutting cycle is about to begin in the US. Now, the market is priced in for about 25 basis points of cuts, maybe a little bit more in September. Seems entirely reasonable given what we saw in the inflation data, which was cooling and gives the Fed some scope to cut, relative to what we've seen in, for example, retail sales data, which has still been relatively strong. So no need to hit the panic button and go for anything more. No need to start with a 50 basis point cut is the market view at the moment. Yet we're still priced for 100 basis points of cuts through the entirety of the rest of the year with only 3 Fed meetings, which means that, in theory, the market thinks there could be a 50 basis point cut at some point. So will Fed talk this week start to, ease those expectations a little bit? Could push up short-term interest rates just a little bit if that's what we see.
And what's the read-through, Paul, for markets here in the Asia-Pacific, implications or takeaways, if indeed that's what Jay Powell signals and doesn't push back against?
Yeah, I think that there's different elements. Obviously, our region being so diverse. Over in Australia and New Zealand, the bond yields are pretty closely tied to the Treasuries. So whatever happens there, we should expect to see DM read through. I think one thing that we've seen emerging in recent weeks, which is kind of interesting, is the weakness of the dollar is being borne out, in particular in Southeast Asia, where we've seen currencies really putting on a tear in recent days and weeks. The Malaysian ringgit particularly leading the pack there, but a lot of the rest of them coming along behind it as well. The rupiah has been strong in recent sessions too, so that's interesting. And then, of course, Japan, where we also get Ueda talking to Parliament on Friday. Could be really interesting. What happens with that dollar-yen exchange rate? What happens to the carry trades? Will people want to put carry trades back on funded in yen, or are they a little bit more cautious after the blow-up we saw a couple of weeks ago?
Paul, thank you so much. Paul Dobson, there, our executive editor for Asian markets in Singapore for us. Joining us here on set to talk us through the read-through as it pertains to Greater China, Eva Lee, head of Greater China Equities at UBS Global Wealth Management Chief Investment Office. Happy Monday. Good morning.
Yeah, good morning.
How do you think Hong Kong stocks will trend when the Fed starts cutting rates? Is that a good or a bad thing?
Okay, pure Hong Kong stocks, it will react.
Hong Kong listed stocks.
Hong Kong listed stocks,
Yes.
there are two kinds, right?
Yeah.
There are ones that are Hong Kong based, have operations in overseas, these Hong Kong conglomerate stuff, they will do well because they will benefit from the, because the money will tied to the Hong Kong dollar and US dollar pack.
Yep.
So US rates coming down, we expect a 1% cut actually for the rest of this year. So it's quite a lot, and Hong Kong rates likely to follow. So that will benefit Hong Kong property, Hong Kong, well, less so Hong Kong banks, but Hong Kong property and overall Hong Kong consumption. But Chinese listed stocks, Chinese companies listed in Hong Kong, they will benefit, but less so because their business is still mainly in China. Okay. So it's a different story.
Yeah. I mean, it seems like right now these markets are just on a downtrend, onshore especially. I mean, are we likely to just continue to be dominated by the weakness in the economy being in a pretty low gear right now?
You have to say yes. I mean, the fact is, if you look at the results season so far, the consumption-related companies, like the leading sportswear companies, revised down their guidance for this year. I mean, even though we only have a few months left, but they still feel not the confidence, the level coming down. Second, it's if you look at most of the internet companies, some of them actually disappoint on top line, but they do better on the bottom line. Yeah. So what I'm saying is they are, in general, very cautious of the outlook, and it's reflected on the reports. Further down the road, I think housing market is still very important. We discussed earlier that, I mean, housing market affects the investments the sentiments of local people consumptions, and it's a big part of the economy. Even though the role or the importance is coming down, but you can say the second derivative is still having an impact on the overall economy. So as a result, of course, it affects the stock market.
I mean, it might be asking the obvious, but is there a direct relationship between the housing market and the stock market?
When we run the statistical relationship between the MSCI China Index versus housing volumes and housing prices, both are showing statistically high correlation, roughly 70%. So that's, even though like we know that, I mean, back in the old days, we understand why. But now, even after the downturn, I think we have not yet seen the detachment between, housing and the rest of the economy. Yeah.
So do we have to see the bottoming first before we can see this downtrend in stocks reverse then?
Yeah, stabilization, this is what we need, right? I mean, price downtrend is, local people, 70-80% of the wealth is in housing market. You see prices continue to come down, or even businessmen. I mean, they would have a second thought whether they want to invest or consume more.
Some of the parts of the market that have done well, I think energy, banks, recently healthcare has done well in the last month or so. Do we stick with the winners? What's the advice?
We continue to like the yield stocks, the dividend yields, the energy, the financial, the utilities, and the telco. These are the ones, and in fact, the SOE ones, they actually need to pay dividend not only to us, but also to the Ministry of Finance. Right? So
they need the money.
And plus, if you look at even domestic market, it's the same. Government yield, we earlier talked about, is 2-ish. Dividend yield, you're talking about even local onshore companies, they're paying roughly 4-ish. So that is a big gap. Obviously, the onshore investors, they can also invest into Hong Kong through Connect.
Right.
They will also, tap onto this 6 to 7% dividend yield of Hong Kong stocks.
Okay, that's the defensive side of things. How do I balance it? I mean, I know you look at growth a little bit too.
Yeah. Internet stocks, home appliances, because we noted that the new trade-in program should benefit home appliances. But internet stocks, so far the result has been confirming our view that they're able to control the costs better than the expected margins, very active in capital management like buyback, paying dividend, and the ad tech tool, which is the new tool for them to generate more advertising revenue, also, sort of reflected in the latest earnings results.
I know you cover primarily equities, but I'm wondering, do you get queries from clients on non-China equity related? So things like gold, for example, have done well. You mentioned CGBs. Has that taken some money away from the stock market? US AI has been a big popular topic, of course, this year.
Yes, I think given the geopolitical tensions, we're just going to elevate it further, elections and what happened to Ukraine and all that, right? So gold will continue. We consider this as a structural story to support gold price. It's not just like, you position some into gold.
Yeah, the world is scary by gold. It's not that.
And I know that it's high in terms of price, but every investor should have roughly 5% of the portfolio in gold. Regarding AI, we still particularly positive on semiconductor. I know that it has recovered a lot of the lost ground, so IE is no longer very attractive in valuations like a few weeks ago. Yeah. But we think that they are still AI enabler. I think that's very important. And of course, some of the software that related to AI will benefit.
All right. Eva, thank you. Eva Lee there. We'll have more from her, head of Greater China Equities at UBS Global Wealth Management, Chief Investment Office. Coming up, Kamala Harris and Donald Trump ramping up their pitches to voters with the Democratic Convention about to get underway in Chicago. The latest from the campaign trail next. And we're counting down the open of trade in Shanghai, Shenzhen, and Hong Kong. This is the China Show. Happy Monday morning. It is wet out there. Futures are flat. This is Bloomberg.
Right, good morning. Welcome back to shows. The reference rate is 714.15. The backdrop is really a softer U.S. dollar going into this Monday morning, dropping against most, if not all of its peers. Big drop against the won and some of this EM complex. So something to watch, of course, ahead of Jackson Hole this week.
Yep, and we got the DNC as well, with Vice President Kamala Harris and Donald Trump will be battling for momentum this week as the race for the White House heats up. Trump is planning rallies in several swing states and a visit to the U.S.-Mexico border, while Harris heads to Chicago for the Democratic National Convention. For more, let's bring in Bloomberg's Vonnie Quinn. She joins us live from D.C. this evening. Vonnie, it's always good to see you. Obviously, we've seen the Harris and Walz campaign, a bit of a honeymoon period. Can they continue to build on that this week in Chicago?
Definitely going to try, Yvonne. That's going to be one of the goals for this week, and there's certainly a stellar lineup. You mentioned the president, Joe Biden, is going to be speaking Monday night. He'll be giving the keynote address, and it builds all week. Barack Obama and Michelle Obama and the second gentleman, Doug Emhoff, Tuesday. And then Wednesday, Tim Walz will be speaking with the DNC, and it all builds up to Kamala Harris's keynote speech Thursday. You mentioned former President Donald Trump trying to vie for the national spotlight with all of those campaign stops, interviews, basically a blitz of events between now and Thursday. But the Harris campaign does have the momentum on its side. It will be looking to introduce Harris to a wider audience to continue that momentum, or as The Economist calls it, Kamala-mentum, and also to continue directionally what the polls are showing, which is that she really has made up the deficit, the Biden deficit. So the latest polling Sunday from Washington Post, Ipsos and ABC News shows that in a head-to-head among registered voters, she would lead 49% to 45%. Now, it's not statistically significant if you take in, all of the errors that might happen, and it is registered voters. But essentially, directionally, this is exactly what the Democrats want to see. And of course, we know that since 2000, after DNCs, there is a polling bump for Democrats positively by more than 2 percentage points, typically.
Vonnie, what more do we know then about, you spoke about, what is it, Kamala-mentum? I hope that stops soon. What do we know about her economic plan and the agenda?
We know a lot more since Friday, David, so we knew that she was going to talk about an opportunity economy. That's what she did, but she has basically laid out some proposals, some promises indeed, particularly for low-income families, parents, and crucially, people who want to own homes. So there are federal subsidies and tax credits, one of them being a $25,000 tax credit for first-time homeowners. And that, as you might well imagine, would appeal very much to those who are renting right now, or to those millennials, Gen Zs, younger people who haven't been able to get on the housing ladder. Not only that, but we know that renters are more difficult to persuade to vote. They don't have as much motivation as homeowners. And for renters, we also know that it's one of their top 3 issues going into this election in the 7 key swing states, according to a Bloomberg News poll conducted in July. For homeowners, that's only 1 in 5, so only 1 in 5 see it as an important issue. But the National Association of Realtors points out that since 2019, the median cost of a home in the United States has jumped almost 50%. So you could see why that would be a very popular kind of proposal from the Harris campaign. Not only that, though, on housing, she's also promising to stop landlords gouging, essentially to stop private equity buying up bulk homes. And she has also promised to deliver 3 million new homes, new bills, in order for the middle class to be able to afford to rent.
Vonnie Quinn there in Washington for us, giving us a preview of really a very material week as far as U.S. election conversation goes. Still with us here on set, Eva Lee, head of Greater China Equities at UBS Global Wealth Management, Chief Investment Office. How do I look at this from a China equity complex? We know it's a risk, but how do I quantify that and mold it into strategy?
Well, I think Trump have been quite vocal about the tariff. That is the key. I think that would affect China. I mean, obviously, they're already paying tariff for the U.S. export. But having said that, Trump is putting down 60%. And also, it depends on to what extent. Are they really pinning point on just China-produced products, or Chinese companies that produce in other area, which is in ASEAN?
Right.
That is a
or
different,
Mexico.
Or that will be totally different in terms of the impact. So we noted that the consumer electronics, which actually is not a Chinese company, but it's a U.S. companies that manufactured in China, export to the U.S. They have actually a high share. We're talking about 25 to 30% share of Chinese production export to US, and of course some of the hardware as well. But the usual suspect, EV car, is not. Actually, because of what Biden administrations, they already, you can say, wipe out the EV car from, because the cost doesn't make sense for exporting to US.
There's a lot of Chinese companies also that have expanded overseas, kind of to avoid this sort of overhang when it comes to tariffs and the like. Is that going to be something that cushions at least some of these stocks as well? I mean, that was a popular trade a few months ago, too.
True. In fact, what we noted is, if you compare 2018, the first round of Trump, the reliance of Chinese, exports to U.S. has already come down. Now it's the number 2, but still we're talking about 19% of total exports going to U.S. So I cannot say there is no impact. And again, it all depends on the implementation and executions. But Harris looks like she's going to continue the Biden administrations. So, i.e., we can sort of predict the, sort of the policy directions. And it looks like to be slightly more positive if you compare to Trump, at least what we heard so far.
All right, Eva. We got to go. Eva Lee, thank you so much. Head of Greater China Equities at UBS Global Wealth Management Chief Investment Office. In the next hour, we're going to be digging into the November election outcome and how is it going to shape, really, U.S.-China ties. We have the former U.S. Secretary of Commerce and Ambassador to China, Gary Locke, joining us, along with Fudan University's Shen Dingli. Pre-market in Hong Kong is opening up here right now, and we are taking a look at how things are looking at. I mean, we still have some earnings, but not as much and jam-packed as last week as well. But we're seeing a little bit of upside here of 0.8%, so extending those gains on this Monday morning. And of course, we continue to watch that drop in the dollar here this morning, 7.15 for dollar China. This is Bloomberg.
Okay, rise and shine, sweetie. That's what really, when you look at that, equity markets are poised to open higher, set to extend 2 weeks of gains already here in Hong Kong. Hang Seng Tech Index better by about 1.7%.
Yep, in terms of stocks to watch here this morning, we are watching Best Smart 360. The stock here plunging after the CEO was arrested by Hong Kong's anti-graft watchdog. We'll have more on that story coming up. The Open is next. Welcome back. You're watching the China Show. We're counting down the open of markets here in Hong Kong as well as in China. And it looks like we are continuing to see this global equity rally. At least Hong Kong is chiming in for another day here after we saw one of the best weeks all of this year when it comes to global stocks. We're counting down to Jackson Hole. We're counting down to the LPR, some central bank decisions as well this week. But right now, it seems like that downturn in the dollar is something that's getting a little bit more pronounced here this morning, Dave.
Yeah, giving us some tailwind across the equity markets. And let's see if Jay Powell gives us more room to sell the dollar even further, of course, and ironically enough, that comes effectively when Asia closes for the week, but certainly we're looking ahead to that piece of data, event. You have some central bank decisions as well to go through this week. Plus, we have a whole list of earnings, which we'll talk about in a couple of minutes here as far as greater Chinese markets go. The open is flat. At the benchmark, we are coming off, though, just keep in mind, the best week for global equity markets for the year so far. We're looking at a mixed open here. Some of the movement, of course, we're still seeing some downside in things like iron ore, for example. The 10-year yield 218 is where we are as far as that goes. All right, here in Hong Kong, a couple of different stories to tell you about, and we probably will bear with us because there's quite a few chapters here. So on the Hang Seng Index, we're up 2 straight weeks. No change after the quarterly review on Friday to the Hang Seng Index, so still at 82 stocks. Can we flip the page, please? Thank you. No change on constituents, although on the Hang Seng China Index, we are getting 2 out and 2 coming in, so we'll tell you about that in a moment here. Tencent's up 1% in the early goings. Also, Alibaba's getting quite a boost right now, 2.3%. Wow. Okay. On the Hang Seng Vol Index, which should be on your screens. Oh, it's not. Okay, I'll just tell you about that right now. We are nearing the lowest in 2.5 years, also on the Hang Seng China Index. So that is indicative of risk coming back here on the table. Okay, as promised, 2 stocks being added as of September 9. or effective September 9th. J&T Global Express and New Oriental Education will be added to the benchmark. JD Logistics is coming out, and also Sense Time Group. The other things that we're tracking today, we probably heard about it. Gold prices hitting a record. Spot gold, Zijin Mining in Zhongjing trading underway as well in China, onshore and offshore. There we go. And also Lenovo out with an announcement earlier on. China Petroleum, which is Sinopec effectively. We're getting a downgrade. I think it was out of Morgan Stanley as far as analyst actions go. I'll correct myself if I'm wrong. But I think I remember it is to be Morgan Stanley. And of course, Bestmart is the big news that's come out. Resumed trade today. The stock is down was down 13% in your pre-market. You're about to see that on your screens very shortly. We're now only down 4%. This is on the back of this arrest.
Yeah, we're getting a little bit more in this statement from to the Hong Kong Stock Exchange. So this arrest to CEO Hui Chi-kwan is connected to an investigation into alleged offenses to have been committed under bribery prevention ordinance. But no charge has been laid against Hui so far. But yes, the stock is reacting to that news as well. But we got some earnings to talk about too today.
Yeah, big developer Poli. You have China Resources Beer, which is a big consumer play as well. Midea Group, more international. So this goes into the appliances and some of the consumer staples names. So this is out. These are the names coming out today. And of course, it goes into what is still not as busy as last week, but we still have some big names coming the next few days or so.
Yeah, on the earnings front, you talk about tech, right? So we had Tencent, JD, Alibaba, the big ones last week. This week, it's more like the Baidus, the NetEase, Xiaomi, Bilibili, Ping An, of course. And we are going to be talking more about the EV sector with Xpeng and Geely also reporting. Let's get to our Asia transport reporter, Danny Lee, who joins us now for a preview of what to expect for these EV makers. I mean, it's going to be a busy earnings week. What's going to stand out to you, Danny?
So I'm looking forward to Xpeng and Geely, the old guard, as it were, in this Chinese EV space, given how much we've seen innovation grow so quickly. Now, just on Xpeng, they're still going to be loss-making, and they've still never made a profit at this stage, and they've still managed to at least hit their targets on sales. So for investors looking at how they're performing, it's meeting its estimates, but they've still struggled to ramp up production and accelerate from being just an upstart to being a credible player. So that should help their earnings overall, still that they're meeting on expectations. Then we've got Geely, who have absolutely been on a tear when it comes to their sales, and that kind of helped them benefit by upgrading its guidance on annual sales just a couple of months ago. So they will benefit from higher earnings. But again, it's still amidst the backdrop of this Chinese EV and autos price war, but they're still standing in good stead.
The other name, which is, you mentioned the old guard, the new guard is Xiaomi, of course, new to the game here. What are we expecting there?
So Xiaomi, they're still not necessarily going to be delivering much in terms of earnings from the EV side of things. They're being just a smartphone maker to being all things to all people, particularly on the EV front. But the fact that they would have delivered by now the low tens of thousands of EVs will help start to feed into earnings. So we actually are expecting to see revenue jump 30% thanks to these much higher priced big ticket items such as EVs. And given they've still got a target of 120,000 in terms of deliveries that they expect to hit by the end of this year, this will all help feed in through towards the end of this year as they look to become more ambitious and be a bigger player. And actually be a bigger player and jump ahead from the likes of Xpeng, who is still struggling.
Danny, thank you, Danny Lee, with helping us set up what to expect out of these EV earnings here this week. In terms of analyst actions, we are focusing a little bit more on the consumer space here this morning. So after some of these market reactions, or actually earnings, I should say, Li Ning cut to a hold at CLSA. You're getting a slew of sort of calls here on the stock in particular. Morgan Stanley also cutting that price target by 30%. They basically said reflecting lower sales estimates on the back of rising macro risks and management's reduced guidance as well. PetroChina A shares has been raised to overweight by Morgan Stanley. They've also done that for Sinopec, I believe, as well. But they're double upgrades for that stock. An equal weight for Sinopec in particular. So they're citing sustainable high yield and gas structural growth for that sector. ZTE shares a call from upgrade there from Jefferies as well, raised to a hold. They said it's been all about aggressive cost control, decent dividend yield, and it also raises its forecast for the company's operating and net profits by around 20% for the next 3 years. The price target about $15 and change there, Dave.
Yeah, in fact, to your point here on Sinopec A shares, yeah, you are right. So equal weight at Morgan Stanley, but the 8 shares are being cut to equal weight, also similar level there at Morgan Stanley. I mean, it's extremely busy as far as analyst actions go because we are about to enter the thick of earnings season. Yeah. So I think it's the first time I've actually had to scroll up and down here my list of changes to analyst ratings.
But you're getting a theme here, high yield, right? That people are still thinking that this dividend play is still quite resilient.
Yeah, you just mentioned that earlier on.
Yeah, especially in the energy sector. It seems to be still remaining, according to the likes of Morgan Stanley. We've got plenty more ahead. This is Bloomberg.
Welcome back. You're watching the China Show. China's Coast Guard says it took unspecified control measures against a Philippine Coast Guard boat early on Monday in disputed waters in the South China Sea. Now, earlier, Manila had defended the presence of one of its vessels near a shoal, which Beijing claimed infringed on Chinese sovereignty. Let's bring in Manny Serapio, of course, our bureau chief over in Manila to talk us through these developments. Yeah, Manny, just get us up to speed. What happened?
So basically, it started on Friday where the Chinese Foreign Ministry spokesperson said that it's called in Manila to withdraw the vessel, a Philippine Coast Guard vessel. This is on Chanbin Reef, which is also called Skauda Shoal or Asbina Shoal in the South China Sea, and for the Philippines to withdraw the vessel all at once because it's infringing China's sovereignty. And then on Sunday, yesterday, the Philippine Coast Guard said it's operating legally because it's within the Philippines exclusive economic zone, and that ship that's been there since mid-April because the Philippines saying that it's there in near a lagoon in the Skauda Shoal because the Philippines suspects that China is doing some reclamation activities, is staying put. And then this morning we have a report from China saying that basically it took control measures against a Philippine Coast Guard vessel, a different one, in the same shoal, and that it deliberately collided against a Chinese Coast Guard vessel. I think this shoal is emerging to be a new flashpoint for both nations, which have competing claims in the South China Sea. The last time we saw a collision was obviously during that time near another shoal, Second Thomas Shoal on June 17. And then obviously that led to the Philippines and China again trading barbs and again trading diplomatic protests, and I guess we'll see the same thing here, although we haven't heard yet from the Philippines so far.
Okay, so obviously that we continue to do this kind of back and forth, and I'm just wondering what is going to be the next thing to watch here now.
I guess the next step would be how the Philippines would characterize what happened today at 6 a.m. Because China. It's what happened June 17th. It was China first, if I remember correctly. It was China first who had a version of how events transpired, and then the Philippine version came in, and then the Philippines lodged a protest against China's actions during that time, and I guess we'll see the same thing here. So it's China who first related what happened here, what happened in Sabina Shoal, and then complete with a video. And then also we should remember that this is happening like just a week after, where the Philippines said that Chinese People Liberation Army aircraft conducted dangerous maneuvers and shot flares while on the path of a Philippine Air Force aircraft while it was patrolling near another shoal, Scarborough Shoal. So I guess we are continuing to see this back and forth, this trading barbs between the Philippines and China, because no one is bucking down, I guess, and they will continue to push those claims, especially the Philippines, who is convinced that these waters are within its exclusive economic zone.
Manny, thank you so much. Manny Sarapia there, our bureau chief in Manila, with the latest and what to watch moving forward. Now, let's turn our attention now to the steel industry in China. And, we've talked a lot about this last week and some of the warnings coming through from the big players. And, one of the market, I guess, iterations of this is, iron ore price is down by a third just from the peak just early this year. In fact, we've now taken out the low recently. This is a Singapore contract trading at about in the low 90s. Now, we're now at the lowest since 2022. And certainly this is the topic of today's Big Take.
Yeah, let's get more on that, right? Which looks into how China's steel overcapacity means in terms of trouble for the world. Our China correspondent Min Lo is with us now. I mean, just give us the backdrop so far, what we're seeing, and what's really going on in the steel industry right now.
Yeah, so China is the biggest producer and consumer of steel. They produce over 50% of the global steel, more than 1 billion tons a year. But the problem is now it is not consuming as much as before. Demand is down 10% since 2020, partly because of that property downturn, and you have softness in government-led investments as well into infrastructure. And so that's a big issue. And analysts are saying that China has already seen peak demand and is expected to only decline steadily from here. That's partly because of President Xi trying to restructure the economy away from this property-led economy to this economy that is driven by high-tech, green tech. So we're no longer going to see the sort of huge, rapid expansion in the property sector that we saw in the past. So the problem now with Chinese producers is that they are slashing prices. They're looking for demand overseas, and that's why we see export increasing, on track to hit 100 million tons this year. That's a problem for global players. You have Chilean plants closing down because they cannot survive against this onslaught of Chinese steel. You have one of the biggest steel maker in Germany, Salzgitter, also saying they are making losses in the first half of this year, citing overcapacity issues. And it's an election issue as well. The U.S., the Biden administration had increased tariffs to 25% for Chinese steel, and it affects the swing states like Pennsylvania. It's a big steel producer, and obviously, as you said earlier, it affects iron ore as well. That's a key ingredient for making steel. It's one of the worst performing stocks, commodities this year.
And what can economic planners do about the problem?
Yeah, so in 2020, the Chinese government had set decarbonization targets, setting emission caps on this sector at or below the previous year's level. So if you look at the chart showing the output levels in 2020, that peaked at 1.05 billion tons. And since then, it has declined slightly. Let's show the chart of the output there on the screen. It had declined slightly since 2020, but it still stayed above the 1 billion ton level. So not making a huge dent. There you go. The last few bars coming down just a little bit, but not making a huge dent on output. But so far, though, Chinese producers are responding to the slump. We're seeing a decline in output by 9% in July, a slight decline in exports recently as well. But you have heard Powell Steel saying that you have a long, harsh winter ahead. Another Chinese producer saying that we need to see 30% decline in the number of firms in the sector for this sector to turn around. How long could that take? Maybe 2 to 3 years? Will there be more government intervention? We don't know. But the last time we saw huge top-down intervention was in 2015-16, during that big steel crisis where the government ordered huge closures of old plants and made it more difficult to open up new plants.
Yeah, the supply-side reform story back a couple of years ago. Min, thank you so much. Min Lo, our China correspondent. Let's get to some of your geopolitical stories, some of the top developments we're tracking at this point in time. Singapore's Prime Minister Lawrence Wong is warning of a regional fallout from rising tensions between U.S. and China. Now, addressing the country in a National Day rally speech on the weekend, Wong says that the growing rivalry is Singapore's single biggest geopolitical concern. He also warned the country will likely be impacted given its reliance on external trade. Now, the International Atomic Energy Agency is warning that safety at a Russian-occupied nuclear power plant in southern Ukraine is worsening. That's after a drone strike hit the Zaporizhzhia plant over the weekend there. The IAEA warns it's seeing an escalation of nuclear safety and security dangers in the area. That's as Ukraine continues its incursion into Russia. Now, a Thailand's new prime minister says her administration is scrutinizing almost $14 billion in cash handouts to its citizens. She says the country's key economic stimulus plan needs more study to ensure fiscal compliance. Now, the cash handout was a flagship promise of the Thaksin-backed Pheu Party and the centerpiece, of course, of a push to grow the Thai economy.
And later we're going to be discussing investment strategy with the Thai government pension fund, which manages the retirement savings for over 1 million employees. That exclusive interview is happening at 11 a.m. in Hong Kong, 10 a.m. if you're watching out of Bangkok. Plenty more ahead. This is Bloomberg. Welcome back. Here are some of the big corporate stories that we're tracking for you today. Shares of New Zealand dairy company A2 Milk plunged in Wellington this morning after full-year profit fell short of estimates. A2 says prospects are souring in China, particularly in the infant formula market. Revenue was up 5.2% year-on-year. The company sees mid-single-digit revenue growth for the coming fiscal year, but yet the stock down some 18% right now. SK Telecom's AI chip unit, Sapion, has signed a merger agreement with rival semiconductor startup Rebellions. The company says the combined business will have an enterprise value of $740 million. Rebellion CEO Song Hong Park will lead the combined company's management, while SK Telecom will support its expansion as a strategic investor. Dimensional Fund Advisors says it's launching 3 actively managed ETFs on Australia's main stock market. The funds include value and small cap strategies, which complement 3 other ETFs already listed on the bourse. Dimensional says it sees growing appetite from financial advisors looking to ETFs to build client portfolios.
Now, for another check of these markets right now, so we're looking at this weakness coming through in the U.S. dollar. So the Bloomberg dollar index is seeing some weakness today. So in particular, really, you look at some of the specific crosses like the South Korean won is taking some of the brunt here. Dollar yen, not so much. That does make, of course, the bulk of this specific benchmark, but it is a tailwind, certainly. When you look at risk assets, we'll see if equities listen, because so far they're not really listening, heeding this trading signal. Speaking of trading signals, here in Hong Kong, we've done very well, relatively speaking, of course, at the caveat that on the Hang Seng China index. So it's a big test ahead here for Hang Seng China as this rally from the low of the month. In fact, this is one of the best performing benchmarks month to date in the world. It's within the top 10. So we're testing both simultaneously, almost 50 and the 100-day moving average. Watch this very, very closely, of course, ahead of some very key tests of earnings this week. Very, very briefly, the state of markets right now, 22 minutes into the session here. Maybe you see it on your screens already, 83 points on Hang Seng China. The rest of the markets, Hang Seng Index is better by 1%, MSCI China 1.1%. CSI 300 is also seeing some upside today. In case you missed the changes or lack of it on the Hang Seng benchmarks announced on Friday following the review of the index compiler, no change on the Hang Seng Index, 2 changes to Hang Seng China, 2 out, 2 coming in, effective September 9.
Yep, and of course we're coming down to not just Jackson Hole. We also have the Democratic National Convention happening in Chicago this week as well, and it's starting to see, as we talked about, that Kamala Harris is getting that narrow lead in some of the key swing states over Trump as well. These are what the betting markets are starting to see now, and you are seeing Kamala Harris basically surpassing Trump so far in the last, I guess you could say, a little more than a month. since, really what we saw with President Joe Biden and Trump, which was basically neck and neck in that dead heat. So certainly the polls are suggesting that as well. Whether they can continue to ride on this momentum this week is something that I think you're going to see Kamala Harris do, and as well as the Republicans and Trump really trying to actually overshadow some of the spotlight that's happening this week with the DNC as well.
Yeah, and certainly one of the topics that we had earlier on was what her economic agenda would look like, right? And I think over the weekends and Friday, we have a lot more information on her plans around to boost the housing market for first-time home buyers. That's certainly one to watch as well. And I think we're also getting some word that around this time tomorrow, President Biden, I believe, will be making a speech. So it's a big week, certainly, going into elections. And interesting enough, the timing on markets will be Friday's the big day on DNC, Friday in Asia, and then we move into Jackson Hole, where, of course, we'll be hearing from His Excellency, Jay Powell, His Excellency for markets there.
And you got to know what's going to be the key driver of all this in terms of markets are concerned, because you still have NVIDIA earnings happening at the end of the month.
Yeah.
Is that going to be more important than what we hear from Powell in some ways as well? Coming up the next hour as well, we're going to talk a little bit more about what this U.S. election is going to mean when it comes to U.S.-China relations. We have a great panel coming up here with the former U.S. Ambassador to China, Gary Locke, joining us, and Fudan University Professor Dingli Shen joining us there as well. We have plenty more on the way in the next hour. You're watching The China Show. Welcome back to the China Show. Here's a look at the CSI 300 a half hour into the session, and we are punching close to those session highs already and extending the gains that we saw last week already for onshore. So we're up about 0.8%, so set for a third straight day of gains. We've seen higher volumes across the board here, and I think it's really that dollar weakness story that is boosting equities overall.
Yeah, in terms of the sector groups here, to your point here, Yvonne, so some of the laggards from recent weeks getting bid up, maybe on the back of this floor in the U.S. dollar. Say mining stocks, IT, and energy, specifically on the CSI 300, leading the sector gains as far as that's concerned. The read across broader markets, though, is less enthusiastic. Well, I'm telling myself that because that's really what price is telling you. When you look at Asia ex China here, so I think we're looking at, and by the way, right, context is key here because we're coming off the best week for global equity markets in 2024 so far. The Nikkei 225, unsurprisingly enough, has been the best performing market since the bottom of the market mania and the panic exactly 2 weeks back. In fact, I'm just looking at my calendar here. So unsurprisingly so, it's led the way back up. Not all the way just yet as far as the Nikkei goes, because you have to all go back a few more days, the week before the market panic, to the BOJ decision to actually draw the top on that specific index. Right, to the point that Yvonne was making earlier on the U.S. dollar, weakness coming through, as you can see, 0.2%, and as you can see, dollar China, dollar won, dollar Korea, and dollar Japan there, leading these declines and weakness across the U.S. dollar. In particular, the won is now trading at the strongest level since about March or April against the U.S. dollar, ahead of some key central bank decisions this week.
Yeah, so you talk about Bank of Korea, Bank of Thailand. We've been, of course, counting down to Jackson Hole, which is still going to be that big event, and what Jay Powell is going to signal in terms of, not just when these rate cuts are going to be coming, but how big as well. Don't forget there's going to be LPRs on Tuesday as well, so, and Bank Indonesia on Wednesday. But I think Jackson Hole is really going to dominate the headlines there. Debate has really shifted from will they or won't they, and they're really talking about how much guidance, what's going to be the tone from Jay Powell as well? I mean, he's been pretty tight-lipped about the timing of these cuts. Is he going to use Wyoming as the stage to sort of set that in motion? And then, of course, Ueda speaking on that same day, as well as he's going to be testifying to Parliament there about that BOJ rate hike just a few weeks ago. Remember that? Don't think so. The market kind of forgot about it.
Who could forget? At least me. I wasn't here. But yes, all the drama, of course, 2 weeks ago. And, can they hike again, right? And how do they communicate that with the markets? Arguably, there was a piping issue there, plumbing issue, as far as guidance to the market is concerned. Speaking of guidance to the market, right, so as Yvonne is pointing out, Jay Powell, and might he stop short of committing to a a rate cut. Mark Cranfield is with us, joining us out of Singapore to talk us through this, our MLive strategist. Mark, I guess the question is, while Jay Powell's probably not going to tell us a cut is guaranteed to come, can they afford, though, to push back against these rate cut expectations?
I think Mr. Powell will realize that trying to push back is rather too late for doing that. The way the market expectations have moved so far ahead, it would actually be dangerous for the Federal Reserve at this late stage to try and persuade investors that they've got it wrong, that there isn't going to be a rate cut in September. So it would do more harm than good. And I think he's quite aware of that. The fact you were talking about 2 weeks ago, we had this market turbulence related to Japan. Well, he wouldn't want to risk a similar kind of turbulence in American markets if he says there's no way we're going to cut interest rates. So he's going to tread the needle very carefully. And you've just heard Mary Daly over the weekend. She's another voice in the Fed that seems committed to the idea that it's time to start lowering interest rates. The tricky job that he has to persuade traders and investors is that they can go ahead with a modest rate cut in September, but without guaranteeing there'll be a whole line of cuts following up. The market at the moment is pricing interest rate cuts well into the middle of next year. That would make the Fed pretty uncomfortable. There's no way they want to commit to a whole series of rate cuts when they know that CPI data or unemployment data could easily catch them out over the next few months. So he'll want to be careful to keep the market on side that, yes, the time is right to begin lowering, but in a very measured way. And so somehow he's got to convey that message without causing huge disruptions, particularly in equity markets.
Equity markets, you're still seeing that, this momentum building, that it seems like people are thinking the soft landing scenario is still very much intact. But I take a look at, bond markets, on the other hand, Mark, which are, still pricing in some aggressive cuts from the FOMC. And then you got vol, right? Equity vols come down. FX volatility is still quite high. Oil markets have stabilized, but gold is at or near record highs. I mean, it seems like asset classes are still, pricing in very different possibilities and scenarios right now.
Yeah, but they are coalescing. I mean, if you look at, we're moving into that scenario where the interest rates are, yes, as you say, they're pricing in lower rates, but they seem to have stabilized there. The dollar, US currency, is beginning to reflect more of that than it was even just a couple of weeks ago. So what we're seeing now is pretty broad US dollar weakness, which typically is in parallel to improvements in equity markets, especially outside the G10 universe. So we're probably going to enter a pretty good phase for Asian markets, for the rest of emerging market equities, where their currencies are helping to drive performance in equities. So if you look across the board today, you'll see the Thai baht, Malaysian ringgit, Korean won, Singapore dollar, all having a very good run. They started it last week. It's continuing again this week. And they're doing it off the back of stability in the yen, the yuan, and now the euro is taking up the reins for the moves in the global currencies. That's always a positive thing for equity markets, especially the ones that need to catch up. And there's plenty of those in the emerging market space. So that's where investors, they can see, they love it in a situation where they can see currency upside and equity upside at the same time. And we're beginning to get that move together. And if you also look across the commodities, you've got oil prices actually slightly in retreat. So there's, for the moment, you don't need to worry about a sudden spike in oil prices to derail things. Gold is also behaving well. Particularly from an equity market point of view, everything is falling nicely into place.
Mark, I'll likely ask you this same question this time next week. NVIDIA's reporting in 2 weeks, and Yvonne and I were joking earlier on. Is NVIDIA more important than this upcoming speech of Jay Powell? To your point, the stars are aligning in the equity market. Do you think positioning and risk appetite has improved enough from the earnings kerfuffle 2-3 weeks back, where markets were reacting negatively to the big tech earnings? Have they recovered enough to push NVIDIA and the broader AI space higher once they report? Well, obviously depends, but once we get decent earnings out of NVIDIA, and hopefully we do so in about 2 weeks, Mark.
Well, you can certainly say that the big moves in equities 2 weeks ago cleaned out a lot of positioning. So you're bound to have had a situation where, particularly in the tech space, the long position was getting pretty overcrowded. Well, a lot of that has been wiped away. People are in a much more neutral space. Seen a bit of a build-up last week where people getting back into the tech stocks, but probably not to the degree that they were in July. So here we are. We've got Jerome Powell to deal with next week. And as you say, NVIDIA, we'll probably get through this week, no problem. When we get into the early part of next week, people will be much more focused on NVIDIA because we've seen before how their earnings can make a huge impact across the market. They're a big enough company. They're one of the few 2 or 3 companies in the world that can actually move the whole global landscape for equities. And they are that important, particularly as the AI story is so central to what's happening in markets. Now, if you look at the past 2 earnings results for NVIDIA, the stock improved a lot after those 2. It went to new highs each time. Now, if we get anything like that next time, that'll be great for the equity space. If we get a disappointing result from NVIDIA, no matter what has happened between now and then, we certainly could see a big pullback in equities. But we probably won't get people too focused on NVIDIA until the middle of next week.
Mark, thank you, Mark Granfield, there, our MLI strategist, setting up the week for us as well. And coming up next, as the race for the White House heats up, we're going to look at how the November U.S. presidential race could shape the outlook for U.S.-China relations. We have former U.S. Ambassador to China, Gary Locke, and Fudan University's Shen Dingli joining us next. This is Bloomberg.
Welcome back to the show. The Democratic National Convention begins in Chicago later Monday, and of course ahead of that, Kamala Harris is embarking on a campaign blitz in the swing state of Pennsylvania. Her Republican opponent, Donald Trump, is also ramping up his political events in a bid here to stall the momentum we're seeing on the Democratic side. Stephen Engel, our chief North Asia correspondent, is here with us. Steve, domestic issues obviously are taking up a lot of the mind space right now, and I'm wondering right now, how is foreign policy then coming into these conversations, particularly China?
Domestic issues are going to definitely play front and center at the DNC, as well as Donald Trump saying he's going to go down to the border at the same time that, of course, Kamala Harris gives her speech to try and steal some of the dialogue away from what the Democrats hope to continue, and that is the unity campaign, obviously really bringing the Democrats together after Harris became the top of the ticket. But again, you know, China also has not necessarily played so high yet. It could during the debates that we're going to get between Harris and Trump. Right now, again, I think the Democrats don't want to lose the momentum that Harris and Walz have by kind of bringing up some of the trade issues and give some fodder to the Trump campaign, obviously. Now, in very simplistic terms, the Donald Trump campaign has talked about across the board upwards of 60% tariffs on all Chinese imports, right? If you look at Harris, I guess the assumption here is that she would be the continuity candidate. She would continue some of these trade policies that we've seen from the Biden administration. Neither party, the Democrats or the Republicans, have talked about rolling back any of those tariffs that we saw put in place during the first Trump administration. In fact, the Biden administration didn't roll back. They added to them. So it'll be interesting to see how China plays on the job front, given the swing states that are so important, whether it's in Michigan with the United Auto Workers and the like. It's going to play heavily. We've seen J.D. Vance, the Trump vice presidential candidate, talk about, I don't like China. I don't like that China has stolen a lot of American jobs. It's a very simplistic narrative, obviously. But again, on the other side, how has this played, the tariffs played into inflation? And that's a huge issue in this campaign. Things are so expensive right now on a historical basis in the United States. And in fact, Kamala Harris, in her economic policy speech more recently, she said he, meaning Donald Trump, wants to impose what is, in effect, a national sales tax on everyday products and basic necessities that we import from other countries. She didn't mention China, but other countries, and that will devastate Americans. So it's going to be an interesting next few months ahead of that November election.
Yeah, Steve, hold that thought. Let's bring in our panel now. And I really want to bring in Fudan University Professor Emeritus Shen Dingli, also former U.S. Secretary of Commerce and Ambassador to China, Gary Locke. Gentlemen, thank you so much for joining us. It's a pleasure to have you both on the program. Ambassador, I'll start with you. We talked a little bit more about, it seems like both parties have some common goals when it comes to China, whether it's addressing those trade imbalances, addressing national security concerns. But, of course, the approach is very different. As Steve mentioned, there is an assumption that the Harris campaign is going to not stray too far from what we heard from Biden as well. Is that likely going to be the case?
Well, it's a pleasure to be with you, Yvonne and David. Obviously, China will come up during the campaign. It has always come up in every presidential campaign. Each of the candidates will try to portray a tougher stance than the other. The problem with President Trump is, as your correspondent indicated, he's proposing up to 60% tariffs. That's a tax, 60% tax on all items coming from China. And in fact, not just coming from China, but tariffs or taxes on all goods coming from around the country. That's a tax on everyday consumers, whether you're buying clothes, a screwdriver, sporting goods, and household appliances. The Biden administration has been, while it has kept the Trump tariffs in place, it has been very strategic in making sure that China does not get a hold of things that it could use to strengthen its military. The Biden administration is restricting exports of high-tech goods, even the equipment to manufacture high-tech goods, restricting biologics going into China, AI, to make sure that these things cannot be used by the military or to suppress some of the populations with China. You're going to see Kamala Harris, if she's president, continuing that very strategic, targeted approach of getting tougher with China.
Professor, let me bring in Professor Shen. How is Kamala Harris viewed in China?
Well, most people don't know her well, and we try to understand her, and she is rolling out her policy if she would be elected, and but still avoid to be interviewed by the media. So my sense is that she somehow would carry on the legacy of current President Biden, namely competing with China while building a fence, building a guardrail not to have the relationship to derail. And also, I think she would not satisfy with the current policy. She would leave her fingerprint in the history, possibly by removing some unnecessary tariff that has been levied by the former president, and try to be exempted by the current president, but that has failed. Meantime, she may toughen U.S. trade policy in some strategically targeted area. So that's what I would expect.
Well, Professor, and as well, Ambassador, I want to put this next question to both of you. I'll give you a chance for both of you to answer. It's a very simple question for a very complex relationship. Can we read which candidate Beijing would prefer to have? They know Donald Trump. They've seen him in action for those 4 years, obviously. They don't, as you said, Professor Shen, know Kamala Harris very well. In fact, Kamala Harris only has met Xi Jinping, from my accounting, once, and that was at the sidelines of the ASEAN summit in Bangkok. So she doesn't have a lot of experience. Is there one particular candidate in the policies that would be more preferred by Beijing?
Well, I don't think that it's possible to get into the minds of the Chinese leaders, because each of the candidates have very different approaches to China, equally trying to be tough. But I think that the problem with Donald Trump's proposals is that it's not just an increase in tariffs on all Chinese goods coming into the United States, but tariffs on all items coming from around the world, whether Germany, Canada, Mexico, France, everything that Americans use, because so much of what Americans use on a daily basis comes from other countries. And if the Trump administration imposes these tariffs across the board, all these other countries will retaliate against American goods, making the American goods even more expensive, and that's going to cost Americans jobs.
Professor Shen, can you give us your take on that?
Well, pure my personal take, not Beijing's take. My view is that China is more sophisticated now than tens of years ago. That who is better than another person. And they are all American leaders. They all want to make America more prosperous and secure. And but in different category, for instance, in so-called democracy, Trump seems to be less caring about this. It's my personal view, not the old Chinese view. And he thinks Hong Kong is of China's sovereign issue, so why the U.S. should care that a lot. But I think Biden and Harris would take this issue differently. And Trump would beat China if China would not meet his target of making America great again, would not buy a lot. In short term, he would make China to lose face and substance. But the Democrats try to have a balance, while seeking that China would buy more, but also try to take some tariff away from what Trump has levied. But Biden is unable to successfully to achieve this. This is, in my personal view, his lack of leadership.
Professor Shen, how do you see China tackling a potential second Trump presidency or a Harris presidency? You know, there's this assumption out there that China doesn't have that much runway to retaliate in some ways, but do you see it that way? And what could be really be the next kind of form of retaliation?
For tens of years, China tried to build a cordial partnership with the U.S. I think still it is in the mind of the Beijing leadership, to what I know. We want to cooperate with the U.S. We want to have a greater partnership on many issues, meal-to-meal, military-to-military dialogue and exchange, people-to-people, panda diplomacy, and anti-drug, as well as climate change partnership, etc. But we meet some difficulties. For this, China tried to blame the U.S., but in my personal view, China is also taking lessons from the consequences of such a competition. China is trying to moderate its position. So if Trump would assume his second term, I think China would take a more smart, more well-principled position in handling his second term. I think China would achieve better than his first term.
Ambassador Locke, may I ask you some geopolitical issues? Obviously, Taiwan is the red line for Beijing, and these two candidates have different views on that. The conventional wisdom is that Donald Trump, and he alluded to it in a Bloomberg Businessweek interview, a month or so ago, that maybe Taiwan needs to pay for its own defense. So perhaps a Trump second administration will be less engaged internationally, whereas Kamala Harris, she co-sponsored the bill on human rights for Hong Kong. She has been, a supporter of Taiwan. Where do you see the two candidates as it positioned on that very sensitive issue of Taiwan, and what tack should they take?
Well, what you're seeing already from President Trump in his first administration and in his recent speeches is pulling back and reneging on a lot of the commitments that America has made to other countries. And so many world leaders are very concerned that President Trump, if he gets a second term, will really pursue almost an isolationist policy, not supporting Ukraine in its defense against the terrible invasion by Russia. And so many other countries, whether in Southeast Asia, Philippines, and other countries, are very worried about what a second-term Trump administration would do. That's why, in the past, all presidents, Democrats and Republicans, have reaffirmed their commitment of a one-China policy, but also defense of Taiwan to ensure that the matter is settled peacefully among the people of Taiwan and the mainland and not by force. And so you'll see President Kamala Harris adhering to that long-standing principle of stability, living up to our agreements, and supporting our allies.
Okay, I think we're just having some audio issues there. Professor Shen, on that very same question, if you could just chime in as well, how do you think this conversation around Taiwan evolves?
Well, China-U.S. have this brand new headache for each side. And I think both countries have rich experience and wisdom in handling this, like what President Biden has said, to have to build a rail guard. But now the U.S. is pushing the envelope to send a military force into Taiwan, claiming they are for technical purpose, not for combating purpose. But this is a violation of U.S. commitment to China when the two countries established their diplomatic relationship in 1979. So U.S. need to understand that pushing the envelope eventually would possibly nurture a bigger escalation crisis. Therefore, Biden, Harris, or Trump second all need to work on this issue more cautiously, taking leadership in balancing the interest of America, a different interest group, especially those in the U.S. Congress, in order to truly build a guardrail. Despite our huge difference, the relationship would not be out of the rail.
Secretary Locke, apologies for interrupting you earlier on. I'd like to get your thoughts, too, on people-to-people exchanges. From your time as ambassador in China, we've seen a drop in the number of Americans working, living, studying in China. And I'm wondering whether you think both sides are now too far apart on that specific aspect on people-to-people exchanges. And I guess on the American side of the question here, do you think Americans should be scared of going to China, which is a view that's come out recently?
No, I don't think Americans should be afraid of going to China. In fact, we need more Americans and members of Congress visiting China to understand its history, its culture, the complexity of the issues they face. Former Prime Minister Tony Blair of Great Britain once said that diplomacy first starts with people-to-people exchange. We need to have more people going to China, studying as students, doing business, or even as tourists. The drop in the number of Americans visiting China is because of COVID, but also in terms of American employees in China. It's because of some of the crackdown in the policies, the invasive policies, the intrusions of the Chinese government into the affairs of private businesses. So there's a reluctance to expand in many areas, business opportunities in China, but we certainly need more people visiting China.
Secretary Locke, it was a pleasure to have you. Thank you so much. That was the former U.S. Secretary of Commerce and Ambassador to China, Gary Locke there, and Fudan University Professor Emeritus Shen Dingli. And also our thanks to Stephen Ingles, our Chief North Asia Correspondent. Still ahead on the China Show, Bloomberg Economics flagging confusion when it comes to PBOC's drastic policy shift. We have more from our team on, of course, that rate regime. This is Bloomberg. 11:29 a.m. in Tokyo. We have Japanese markets heading to that lunch break here, and it's pretty tepid overall in Tokyo. You take a look at how the Nikkei and topics are doing. We're basically flat for that benchmark at 147.58 levels. So that weakness in the yen also seems to be reversing, just given what we've been seeing, right? This downturn in the dollar that continues here in the Asia session. And yeah, CGBs are up about 2 basis points in terms of yield.
Yeah, so about 2 Mondays ago, right, was that major market meltdown. Really, ground zero was Japan. And since that point in time, the Nikkei has actually been one of the best performers, if not the best one, I think even in dollar terms, since that bottom, unsurprisingly so. Now, how far has the Nikkei actually come all the way from that Monday? In fact, we have to also trace it back a few more days before that, because the sell-off actually began late in the week prior to the market meltdown, Thursday, Friday, when the BOJ decision came out and they signaled that rates were going to go even higher. So while we have recovered from the bottom, we haven't quite fully reversed all the losses since that point in time.
There was much more before that August 5th day, right? Certainly that we have to watch out for as well. CGBs, we're watching that very closely here this morning as well, just given that it seems like we've seen a bit of stabilization in this bond market. At least this rally has taken a bit of a pause, I guess you could say, just given some of the extreme measures the PBOC has done in the last few weeks or so. Are they back to some of these more comfortable levels for the central bank? Certainly is a key question. But yes, there's a lot of, I guess, confusion. We still got to talk through and digest what this whole kind of rate regime is for the central bank. They're trying to shift things quite a bit.
Yeah, the dates and the calendar. So last week, Yvonne and I were actually ready to break the medium-term lending facility, and we did get word that, of course, they were moving the dates from the 14th, 15th of every month to now in the late 20s. So these potential changes, right, moving the one-year MLF to after the loan prime rates, which, by the way, are coming out tomorrow. Should we read anything into that? Does that mean something? Let's bring in David Chu, our Bloomberg Economics economist, of course, to take us through this evolving framework of interest rate policy here and what it means.
Well, I think if we were a central banker, we should understand this, that the PBOC is trying to reshape its interest rate regime, which is in line with other major banks, major central banks. Because if you look at the ECB or the Federal Reserve, you would see that these central banks only control the near-end policy rate and let the market to decide the far end. So it's a natural thing for the PBOC to think so.
You're saying that this is not going to be a smooth transition, though. What do you see as the challenges?
Yes. What I just aside was an ideal scenario that the PBOC can make the transition toward a more modern central bank. But in fact, the PBOC's mandate is somehow different from other major central banks. Because, for example, now the PBOC is carrying a mandate lowering the borrowing cost. Given that in China, it is the bank loans that dominate the credit market, which is different from other markets that bonds or corporate bonds are dominating the market. So that it means the PBOC needs to get the commercial banks to lower their loan rates. But now, if the PBOC give up the control in the long end, how can they do it? That is the conflict.
Right, because the long end affects the rate margin effectively of the banks, right? And I guess the question now is, real rates are still high in China. We know that. We know there's a need to lower interest rates.
Yes.
What is the priority right now for the central bank? Because going into these changes, we were thinking that they were gearing up to introduce more aggressive interest rate policy, or is it you think they simply want to fix the plumbing of that transmission effect between what they determine and what hopefully the banks eventually do?
Well, for the priority now, I think it's still for the PBOC to lower the funding cost in the economy, because we previously calculated that in last year, more than half of the new credit was used for paying interest. So it's a huge amount that, so that is because of two reasons. One, it is because of the huge amount of existing debt. Second, it was because of the relatively higher interest rate, right? So the PBOC's priority for now, I think, is still to lower the interest rate or the borrowing cost. It's not for the PBOC. The priority is not to transition to a new interest rate regime. I think it's a bit too early to take the step. But anyway, it's the central bank decision. I just want to say it's okay, you can do it, but you need to manage it very well, and you need to know the priority now is to lower the borrowing cost.
David, thank you, David Chu there, our economist at Bloomberg Economics. Just want to bring and recap some of this data that we got out of Thailand. So we're talking about the GDP numbers for the second quarter, actually beating expectations. We're seeing growth of 2.3% year on year. That, in fact, is one of the highest prints we've seen since, I believe, March of last year. So obviously the economy has been aided partly by this rebound in tourism. There's still a lot of questions on what the Bank of Thailand is going to do this week. Are they going to give in to that pressure from the government? They've been holding up so far. But really, the resilience that we're seeing, the Thai baht, is one thing we're watching very closely as well, just given all this political uncertainty around the new prime minister and the like here as well. I think Credit Agricole has a forecast for baht declining still to 36 baht versus the dollar. Yeah, and, we're maybe a step closer to that right now with the strength we're seeing in the Thai baht as we speak. Although, all the developments, of course, and to the point Yvonne was making on GDP growth, right? This conversation around the stimulus from the Thai government here. In fact, the new prime minister, we're starting things off here with some of the global headlines we're tracking here, is that the new prime minister says that her administration is scrutinizing this almost $14 billion. These are the cash handouts to citizens. Now, she says the country's key
economic stimulus plan needs more study to ensure fiscal compliance. Now, the cash handout was a flagship promise of the Thaksin-backed Pheu Party and a centerpiece of a push to grow and stimulate the Thai economy. Now, Singapore's Prime Minister Lawrence Wong is warning of a regional fallout from rising tensions between the U.S. and China. Addressing the country in a National Day rally speech, Wong says the growing rivalry is Singapore's single biggest geopolitical concern. Now, he also warned that the country will likely be impacted given its reliance on trade.
And the International Atomic Energy Agency is warning that safety at a Russian-occupied nuclear power plant in southern Ukraine is worsening. That's after a drone strike hit the Zaporizhzhia plant over the weekend. And the IAEA warns it's seeing an escalation of nuclear safety and security dangers in the area as Ukraine continues its incursion into Russia. And Israel and Hamas, meanwhile, are blaming each other for impeding a ceasefire and hostage deal. And this is as U.S. Secretary of State Antony Blinken arrived in Tel Aviv to press for an agreement. Let's get to our senior editor, Bill Ferry, is joining us now with the latest. So it seems like we see finger pointing on both sides of this. But what really is behind this and what's driving this sort of holdup?
Well, there was some optimism coming out of the last round of talks last week and over the weekend that maybe a deal was within reach. And then it seemed as soon as the negotiators got back home, they started walking back some of that optimism. That said, there are additional talks planned at some point this week. They haven't set a date yet. But the real holdups still seem to be some of these things we've been talking about now literally for a few months. It's the role of Israel's military when there's a peace agreement. Do they pull back from some of these border checkpoints and hand that back over to the Palestinians, or do they stay on this border with Egypt to block the flow of arms and other and militants going back and forth? How many prisoners are released? How many of the hostages are released? How many are alive, and how many have been killed in the conflict? These are the things that seem to be what the negotiators are spending a lot of time on. We do know, as you said, U.S. Secretary of State Antony Blinken is now in Israel. He's expected to meet with Benjamin Netanyahu late morning Israel time. So there's an additional push going on. And of course, hanging over all of this is the threat of a retaliation from Iran on Israel for the killing of the Hamas leader now almost 3 weeks ago.
And Bill, that meeting, I believe, which is happening today, 11 a.m. local time, between Antony Blinken and Prime Minister Netanyahu, are we expecting any breakthroughs there? How should we be forming our expectations around that upcoming chat?
I mean, I don't think we're going to have a big announcement coming out of it, but I think the U.S. goal is to persuade Netanyahu to accept the deal that's been on the table in Qatar. They still have to, there's still the Hamas side of this, and both sides have seemed to pull back a little bit, but to try to see if they can iron out any of these final differences so that when the talks resume later this week in Qatar, that they can actually come together and have a formal agreement.
Bill, thank you so much. Bill Ferry, our senior editor in Singapore for us. Coming up here on the shows, we'll get to you guys an update of some of these big movers across the energy space and also some big movers to the upside as far as Chinese tech names are concerned. Driving up, as you can see on your screens, the Hang Seng Index better by 1% this Monday. This is The China Show.
Well, the company that brought the wizarding world of Harry Potter to life at Universal Studios Japan is banking on 2 new theme parks to attract more overseas visitors amid fluctuations in the yen. Our Asia Trade co-anchor Sherry-Ann visited one of those parks in Tokyo.
It's hot here in Tokyo. In fact, it's been a record-breaking summer. And Japanese people are finding some relief through indoor activities. This theme park, Immersive for Tokyo, has more than a dozen attractions, keeping locals and tourists entertained and away from the boiling heat. Theme parks, in fact, have had a major boom after the pandemic lockdowns, but recently, with rising inflation and dwindling Chinese spending, that's kept their businesses under pressure. With Japanese real wages turning positive for the first time in more than 2 years, we'll be watching whether consumers continue to open their wallets for these unique experiences.
Yeah, in fact, Sherry sat down with the man behind the immersive Ford Tokyo, Tsuyoshi Moriaka of Japanese marketing firm Katana. They discussed their latest parks, the outlook for the entertainment industry, and also the impact of inflation and the currency and these fluctuations we're seeing on consumer spending in the country.
Live entertainment itself, especially theme park business, is representing most of the live entertainment business. It's growing. In the past 10 years, except for COVID-19 period, we are every year, in average, 8% growing. So people may say, the Japan population stagnant and consumption stagnant, the cheap yen, maybe consumption gonna be declining or plunging, Overall, maybe slightly consumption is declining, but entertainment is growing. That's a fact. And especially theme park business is growing very rapidly, and mainly driven by the Universal Studios Japan, growing from 2010, 11. They are growing.
Which, of course, you helped turn around that business. But you mentioned the cheap yen, which is, of course, why it's really attracting foreign visitors, right? But at the same time, I realized this theme park is mostly in Japanese. So how are you trying to capture that market?
Foreign visitors, maybe we are riding on the two waves. One, of course, cheap yen, but they are coming more. But more like that in Japan as a brand. I think you may know Davos Forum. Japan is always rated, the number one or one of the top of most attractive, tourism value we have as a tourism asset. We are very much strong. So lots of people want to visit Japan. That's one thing. So they are growing. And so in order to capture those waves, we as a marketer, we really would like to strike the moment that they want to make a decision. When they are considering visiting Japan or other countries, or then visit Japan, where to visit. That's basically 4 to 6 months in advance to their visit. So the period we are reaching to them when they are staying in a domestic country, we really want to touch and reach lots of digital communications.
I think one of the most appealing things, in fact, is the fact that this is indoors at a time when we're experiencing one of the most record-breaking summer heat. Is that helping your business?
Yes, I would say yes, because unexpectedly, especially this summer, it's more than heat. It's crazy, right? And those consumers feel risk to go outside. But air condition, whole day, very comfortable. That's compared to those outside big facilities. They're always concerned. Oh, is that okay? Too much heat? Oh, immersive Fort Tokyo is indoor. It's advantageous for us. Yes.
Junglia, though, it's going to be outdoors. It has lots of jungle experiences, opening in Okinawa next year. The location seems to be pretty strategic. How much demand do you expect from Chinese travelers, Southeast Asian travelers, and just domestic tourists?
For the year one, the awareness of the park newly developed, taking a little bit more time, right? So I think year one would be majority comes from domestic tourists. That's our expectation. And but year 2, year 3, year 4, beyond, those awareness is more penetrating to the outside of Japan, and the tourism will be choosing our park as a destination. So year 1, I think it's probably less than 10% or maybe 20%, inbound portion might be reality. But year 3, year 4 gradually increasing, and for example, 10 years later after the grand opening, probably half will be coming from outside of Japan. That's our prediction.
Is that also part of factoring in the prediction that the Chinese economy will get better in a few years?
Not necessarily. I'm not an optimistic person. Even having the some pessimistic assumption of the Chinese economy, because we cannot control, right? We always marketer has to plan for the conservatives. So we assume probably the kind of recession gonna be. But still, there are lots of people from Thailand and especially Taiwan and Singapore, Vietnam, lots of Korea, lots of countries watching Japan as a destination, and Okinawa too.
And that was our Asia Trade co-anchor Sherry on in Tokyo with the Katana CEO there, Tsuyoshi Moriaka. And if you're a Bloomberg subscriber, you can catch up, by the way, with all the interviews you might have missed here, our interactive TV function, TV Go. Also join the conversation here on shows. You know how to reach us. IB Go for our Bloomberg clients, of course. You have our permission to slip into our DMs. Only here, though. This is Bloomberg.
All right, we just have some alerts here when it comes to what we're hearing from this election and what it's going to look like in Japan. So, confirmed date possibly, according to FNN, that the LEP leader election to be held on September 29th. So a little more than maybe 4 or 5 weeks from now, we might get a little bit more clear sense of how that race is going to turn out. But basically, we talked about this race has been pretty much just a toss-up. I think there's a few politicians that people have narrowed down, but yeah. It's just open for grabs right now, it seems to.
Doesn't include, of course, the current prime minister.
Yes.
There we go.
Yes.
About 6 weeks from now. Okay, let's get to your China brief today and look at some of the big stories making headlines in national media and securities journals, starting with this, too.
Yeah, so they're talking about the renminbi and exchange rate against the U.S. dollar will remain, quote, basically stable despite recent volatility. And they're quoting industry insiders. The article says the currency's two-way moves reflect supply and demand dynamics in the foreign exchange market. Still, it says companies should actively use derivatives or seek local currency settlements to limit their exchange rate exposure. And the 21st Century Business Herald reports that more cities have scrapped sale price restrictions on newly built homes. Cities include Xinyang, Shenyang, and Zhengzhou have recently allowed developers to independently set their own prices based on supply and demand. Analysts told the paper the policy adjustment should help speed up property sales as firms continue to face funding stress.
Meanwhile, state media hailing China's ties, specifically with Vietnam, as the Vietnamese president, of course, begins a 3-day state visit. The positive coverage includes an editorial in the national tabloid Global Times, which compares this bilateral relationship to one between comrades and brothers, transcending geopolitics. Media outlets are also noting how China is the first country the Vietnamese leader has visited since taking office. He is due to meet with Chinese President Xi Jinping and Premier Li Qiang, of course, during this visit. Okay, let's turn our attention back to markets, and it's a good day to be long these equities, specifically in Hong Kong. And, the pullback we're seeing, so we heard about the VIX on Friday. It's also happening, by the way, in similar gauges and indicators here in Hong Kong. So you have two at least, the Hang Seng Vol Index and Hang Seng China Vol Index too. And as you can see, we're now pushing towards the recent lows, and this takes us all the way back to 2022, which goes into prices rising, at least relatively speaking. On Hang Seng China Index, we are testing simultaneously two fairly important levels here, which just happen to be where you are on both the 50 and also 100-day moving averages. Watch if we break above this too.
Yeah, BofA has an interesting note that just came out this morning talking about what's the silver lining in this dull market. Winnie Wu and her team, and they're saying China market was stable during the sell-off back in August. We saw MSCN falling some 15% from May and then consolidated. The fact that it's uncorrelated to markets in Japan and India and Taiwan, it seems like it's possibly a good thing, this diversification, as people have been talking about as well. And market volatility declined year to date, so not a bad sign of that as well. You take a look at what's been really moving these markets. We talk about how tech is really kind of driving those gains of the Hang Seng here right now. We're getting a little bit more details on the EV sector, so a lot of earnings coming through this week as well. Geely, Xpeng, as we said. But also there was some update on this document about what that trade-in program means for the EV sector. So that's really what's propelling the likes of Xpeng and NIO to be some of the top 5 kind of drivers there. Li Auto also is up some 7% this morning. So that certainly is a key focus here today. But yeah, the likes of Bilibili, NetEase, some of these gaming stocks, tech stocks, Xiaomi before their earnings, those are all doing quite well today in the Hong Kong session.
Yeah, as Yvonne is pointing out here, a closer look at some of these EVs, right? In fact, if you don't see it very clearly, here we go. We've magnified it for you. Xpeng, 4%. And by the way, some of these names have been absolutely battered recently. So there is obviously also a technical tailwind here behind some of these big moves we're seeing in some of these EV names as well. Now, on top of all of the big earnings coming through, not just in big tech in China, but some of these EV names, of course, we previewed it earlier on. It's also a big week for central bank decisions here in the region.
Yeah, so you talk about Bank of Thailand, you have Bank of Indonesia, Bank of Korea. I think out of all of those three, I think Thailand, Korea are probably the more interesting ones, given just, Bank of Thailand, they've been trying to resist this government pressure to cut rates here right now. We just got some pretty solid numbers in GDP out of Thailand. And Bank of Korea, most economists that we talked to say they may be one of the first central banks to actually start cutting rates this year. Well, of course, we did have the RBNZ, which was a bit of a surprise. But then again, they could be next in line. Yeah.
On Bank Indonesia, of course, it's that yield differential. They want to be able to keep the currency, which, by the way, has, because of the dollar weakness, has stabilized as well as far as the rupiah goes. And, of course, tomorrow is, well, one form of a rate decision in China. Of course, banks will be submitting and publishing the rates, of course, for their prime clients. The loan prime rates are due around this time tomorrow. Right, so that's a preview of the week ahead, and that's just about it from us here on the China Show. Markets are doing relatively well. They're quiet Asia-wide. We're better here in Greater China. Bloomberg Markets Asia is up next. This is Bloomberg.